Factoring, market positioning, define great risk reward trades. A little bit of that I'm doing today on the Canadian dollar. Let's get going here. This is, I've had the pleasure to present this multiple times for Trade Thirsty, and I love the fact that we get to do all that, which is amazing. So rock and roll in that regard. So risk disclaimer, I started this all out with this because I have to, because it's smart. Everyone, this is some really tough stuff. Trading is really brutal. It's really tough. It's very hard. I've done it for a living for 8 years now, like literally where my P&L is what pays my bills, and it's just freaking hard. And a very small percentage of people succeed doing it. It takes a lot of, and it's not, honestly, this obviously you need to have an effective system, but it's as much about your discipline as it is your system and your ability to lose 8 out of 9 trades and then still take the next one. Because I lose 8 out of 9 trades more often. You'd be surprised how often I can lose 8 out of 9 trades. And then in the next 2 trades, I make it all back because I'm following a system. And I know, and I've done this year, time in and time out. So just having that confidence, conviction, and belief in your system and then that discipline to follow it is a critical component there. So boom. About me, I'm a cross-asset class trader. It's what I do for a living. I wrote this book called The Global Macro Edge, Maximizing Return Punitive Risk. I'm a Marine Corps veteran. The money that I've made selling the books goes to train and place service dogs and military veterans. I want to give a big shout out to Jeff Anderson. He's the head of Rebuilding Warriors. He just had his right foot amputated a day ago. This thing came on quickly. It actually nearly cost him his life. So I'm sending my prayers and God bless Jeff Anderson. I'm a foreign language enthusiast. I speak Japanese, Chinese, and Portuguese. My wife is from Brazil. I love foreign languages. I think that they're great and understanding people. And I am based in the beautiful city of Las Vegas, Nevada, i.e. Vegas strong. So I talked about some of where these things went. Jeff Anderson, the guy I just alluded to, that's him on the left here. Just an amazing guy. That's my dog, Delta. She's amazing. She's my service dog. She's incredible. Here's red, white, and blue dog tags as well. A great organization. There's Delta there as well. That's me. Each different $3,000 checks. And the guy in the middle here is a former Army Apache helicopter pilot. Who we donated a dog to, one of the 8 we've given so far. Everything I'm showing you here today is a part of my process, of what helped me take $100,000 and make $3.1 million between 2010 and 2015. I can tell you that 2016 was another robust year. 2017 made money, but the worst of the years of the last 10 years was a really rough, compressed all asset classes. Like I said, I still made money, but the lowest P&L of all of those years combined. And then 2018, off to a pretty good start so far in 2018. But again, 100,000 to 3.1 million. You'll notice here in October 2015, I always point out the losses. Dropped $181,000 in 1 month. In July of the year, I made $180,000 in 1 month after ripping off 97, 127, 126, 92. All of this verified by this letter right here by Mike Coglianese. So the Global Macro Edge series that I had in New York last week, you can watch it on webinar. Mike Coglianese was there. I hired his firm to come in and verify my track record. And, we just try and the Protean trader, just try and set a different standard, in terms of transparency, in terms of just, if you're going to commit the time to something that's there. This is also in my book. If you go to Amazon online, you can do the look inside feature. You can watch it on the look inside feature. Okay, like I said, trading is difficult. I'm not a buy green, sell red signal type of guy. Just leave now if you want that. I just can't facilitate that. I build a lot of different models. I incorporate both quantitative and qualitative aspects to this. I put in thousands of hours of work. Have taken a lot of freaking headshots, gut shots and shots everywhere else on the male body you can imagine when it comes to trading, and get up and rely on my Marine Corps background, my Marine Corps training to persevere, stay disciplined, and follow a process. So we'll see today if that generates P&L. It's done so 66% of the time for me in my trading career, in terms of my win-to-loss ratio on days and what I make versus what I lose. So we'll see. Learning my process is analogous to learning a foreign language. It takes time. It's done incrementally. It took me 5.5 years to write that book. So it should take a good year to really read it and digest it. And if you do that in a year, you're way ahead of the game. I hope the presentation today raises your market IQ and gives you a process that can deliver value for years to come. All right, a little bit of the background goals of this presentation. What helped me break through, explanation of market positioning, and the process to integrate market positioning into one's trading, a little bit like I'm doing today, and so on and so forth, with real money on the line. My story, I was a solid technical trader. Despite this, I struggled to generate any kind of life-changing returns. The things that changed my life were as follows. One, incorporating the macro narrative. 2, building an intuition infrastructure. And 3, understand the relationship between various market regimes. And then of course, using market positioning. And then, of course, understand that there's no silver bullet to trading success. All good. So what is market positioning? It is the net exposure of a particular market based on expectations of a future event. So in the case of the Canadian dollar today, coming into this Bank of Canada meeting, there is an expectation, okay, that the Bank of Canada, based on these NAFTA talks, based on some of the weaker economic data, that they may come out with some weaker language. And so, given that possibility, the market has a little bit more of a bias to the downside in terms of this than the upside. Now, what's unique about this is that structurally, the market is longer Canadian dollars than they are short Canadian dollars. So I'm actually taking a position that, accounts for the fact that I think they're going to be dovish, but also gives me a chance to play this back the other way, because I think that whatever dovishness happens will be dispelled fairly quickly. Okay, and you can see my bids working down here. So these are my green bids working here. I'm working shorts throughout. I also have, a call spread on as well. And I'm looking to play this move. I think there'll be a jerk. I even think before the announcement, some of these may get filled actually. And so play this down and know that, okay, there's no level of hawkishness I see them coming out with that puts this call spread. So let's just say I carry this for the next day and a half. These end up expiring out worthless. However, in this structure, and this is why I talk about there's no silver bullet to any of this, you need to have all these different tools at your disposal. I can play this move lower. In essence, I'm long the 77 calls. I'm short the 78 calls, all right? So I capture 50 points from here up to here. I lose 50 points from here down to here. I'm short 20 contracts against that, okay? But specifically, I'm building a long gamma position on the downside, and I'm obviously short gamma should we rally. It's a unique option structure that I put on here to capture a very specific macro narrative around the Bank of Canada. Again, this is not a buy green, sell red situation. We'll see if it, how it ultimately plays out. And so when I talk about market positioning, I talk about the net exposure of a particular market based on expectations of a future event. So why is market positioning important? Help me determine the viability of its technical setup. It can enhance or detract from risk-reward ratios, as I talked about earlier. Why am I not letting this Canadian dollar run short? Because I think the market does have a sense that this is going to be more of a dovish announcement. And so we're going to watch all those things. We're going to watch still some of the reverberations. We have 6 minutes till the U.S. equity opens from some of this news in terms of Gary Cohn resigning and what that means for tariffs, etc., and go from there. So, also presents independent opportunities to trade tactically. And this is covered extensively in my book in Chapter 18, The Global Macro Edge, titled Quantifying and Visualizing Market Positioning. That chapter alone took me 3 years to write of the book, There goes a dump in crude right there, right at the open. That's interesting. All right, very interesting. So we'll keep that. I told you I'm going to be trading crude, so we'll keep an eye on how crude may trade. Okay, so when measuring market positioning, there are a couple factors. All right, one is the market position measurement, okay, what I call MPM. Okay, the second is the impact ratio, all right? And the impact ratio determines, and I'm going to go over each one of these points, but again, the market positioning measurement, or MPM, and then factor 2 is the impact ratio. All right, so when I talk about measuring market positioning, I talk about the market's trading at a discount or a premium. So if I say that the market, and that's based on the implied outcome of future events. So the first example would be if the Euro USD can be trading at a 75 tick or 40 basis point discount based on the perception that FOMC will come up with a hawkish statement. So right now, if you want to argue that rate differentials are important in macro, okay, I can say that this upcoming Fed announcement, it's expected the market's going to hike, and come out with generally hawkish language. As a result of that, the euro was trading 75 pips lower than it would normally be trading, or in this case, we use 75 pips, 75 ticks to highlight this example, that would normally be trading. If for some reason the Fed doesn't hike, or if the statement itself isn't as dovish as isn't as hawkish as people think, the euro will actually reprice higher. So in that case, we would talk about the euro's trading, at a discount because it's trading lower than, it's trading at a discount, what I would call an FOMC discount. And so I'm always assessing, is this market at a discount, is this market at a premium? And in the course of this presentation, I'm going to provide you with a little bit of an outline as to how to determine that and go from there. Example number 2, the 5-year Treasury note can be trading at a 2-handle or 15 basis point premium based on the perception that the Trump administration will not get any tax plan passed. Well, we know that they did get it passed, but the idea that, okay, if they get it passed, it's going to send supply higher, that's going to increase the deficit, blah, blah, blah. But as long as we don't think that that tax plan will be passed, the Treasury market's going to trade at a premium as a result of that. But if that perception changes, okay, it may trade back it may erase that premium if that tax plan gets passed. And, what have we seen since December when the tax plan was passed, et cetera? We've seen, obviously, the Treasury market come off quite a bit, especially the front end. And we saw flattening driven in the last quarter of last year, driven largely by the front end selling off. It helped a lot of that flattening bias that we saw. Okay, so let's go over another example of trading at a discount, all right? So the euro can be traded at 75 tick or 40 basis point discount based on the perception. The FOMC will come out with a hawkish statement. Spot years at 119. It'd be 119.75 if that perception statement was neutral instead of hawkish. So hey, Fed comes out. They kind of waffle a little bit, which the Yellen Fed did a ton during her tenure. Always waffling, always uncertain. And so people thought that, okay, they're going to start to get more aggressive here. Well, that didn't happen. And there you go. All right, so the FOMC doesn't come out with a hawkish statement. Euro will rally 75 ticks higher, effectively erasing that discount on the reprice higher. Okay, I talked about the premium, and I'm going to apply the euro again to that similar example. The euro USD can be traded at 150 tick or 80 basis point premium, and the Trump administration will not get any tax plan passed. Well, the event does happen, and sure enough, the euro can sell down when that takes the place, when that happens. Well, there you go. So the dollar had all sorts of other issues last year, and the euro actually rallied to end the year against the dollar. Boom. All right, so how do I measure its potential effect? One is that first way I do it is called the impact ratio. All right, and impact means market price action. It's this proprietary software I developed, which helps me synthesize events and score things, and I build what's called an impact ratio around that. And crude selling off pretty nice here. We got 1.5 minutes of the U.S. equity open. And I'm not purposely multitasking. I just love watching the live markets. It's what I do. That's what I breathe, eat, and sleep, and go from there. So one of many unit of risk ratios that's out there, and that's the impact ratio. When we go back to the impact ratio, here's a specific example from 2015. Made 97 large in April of 2015, and about half of that came using the impact ratio around the non-farm payroll number and how that all played itself out. So, boom. On that day, there was a sense, and I read Hedgeye. Hedgeye was a big factor in that. Hedgeye research. There was a real market position that this number was going to come in hot, and as a result of that, it created an opportunity that to be long the euro created a really nice positive skew that if the market even came in neutral, we can get a positive outcome. Heaven forbid it came in weaker, we get a big outcome. Well, the number happened to come in about 100,000 weaker. I got in here, got out around here. Great trade using market sentiment, market positioning. And again, this stuff changes. That's why there's no black and there's no, buy green, sell red, because the nuances, the idiosyncrasies, the narratives are always changing around this stuff. And you have to adapt, and it takes a lot of work and a lot of attention and focus to make all that happen, Boom. Okay, now here's another example, going back to 2017 of the 2-year Treasury market. There was a huge MPP, it was trading a huge MPP discount as a result of the market believing that the Fed was going to come out hawkish. This is almost a year ago today. We come up to this 1-year anniversary of this. This was an amazing, incredible trading day for me for the wrong reasons. But there was an MPP discount on the 5-year Treasuries in the FOMC meeting, and any long entry just could do really, really well around that. So net, if you went long this day, the Fed came out, they disappointed. They talked about inflation not reaching its target, that they talked about some other things before they were going to hike rates, and so as the market was keyed up because the Fed had effectively raised rates intra-meeting a year ago. They'd actually come out with some announcements like on February 28th and March 1st that repriced the Fed funds curve to the point that they almost all but priced in a Fed hike for this meeting. So they do an intra-meeting hike in essence, and then come out with some really dovish language. It was kind of a bizarre scenario in terms of the annals of FOMC history. And nonetheless, the front of the curve on this dovish rhetoric just screamed higher as the Fed just basically said, we don't know what we're going to do about inflation despite our intermediate hike. It was what it was. And so as a result of that, this is a case where market positioning went the other way and just boom, just screamed. So I use the impact ratio to help determine the market positioning measurement. And here's a little bit of a situation going back to that non-farm payroll situation there, okay? We have a big beat of like 267,000. It's about a 12% probability. Modest beat about a 24% probability. In line, 28% probability. And modest miss about a 24% probability. And big miss, 12% probability. So I compute all these up. I'm not going to get into the math because I cover this in the next course, but I just want you to conceptually get, okay, what's the range? All right, if there's a big beat, but you're going to lose 80 ticks. If there's a modest beat, you lose 10. In line, you'll gain 35, which is really what you want to focus on, is the in line. If If there's a modest miss, you'll gain 60. If there's a big miss, you'll gain 145. You can see the skew here. If there's a big miss, you make 145. If there's a big beat, you only lose 80. And so that at its core is what the market positioning model is all about, is identifying where that skew is and then applying a qualitative macro narrative around it to determine if this is a viable trade or not. And that's in essence what this course is in a nutshell. So here's some wonky math. It's really not that complicated. And I provide a spreadsheet for anyone that upgrades and gets the course as a free spreadsheet that you can just put the numbers in. You don't have to worry about even making the spreadsheet. But from this euro trade, there was 29.66 of positive premium, or market position premium, meaning if you're long going to the euro report 100 times, on average you're going to make 29.6 ticks, okay? And that's kind of what we're looking at. All right, so like I said, the impact ratio stands for market price action. It is based on this proprietary software I called Impact to synthesize breaking news events, and it helps me manage all my positions and then incorporate impact ratio and MPM into my software. And really what the impact ratio does is it projects the number of risk multiples that are at play. So if the euro works in our favor, it'll be 7 risk multiples. If it works against us, it'll be 2 risk multiples, 1 risk multiple, 3 risk multiples, comparable to like what a standard deviation move is. So impact ratio says, okay, if it comes in like this, it'll move 1 standard deviation against you. It'll move 2 standard deviations against you. But standard deviation and risk multiples are not always the same thing. All right, so here's an example of the 5-year treasury on the FOMC decision. If it's very dovish, you're up 2 risk multiples. If it's neutral, plus 0.3 to down 0.3, modestly hawkish and very hawkish. And this was just a random example from Chapter 5 in the Global Macro Edge where I outline a scenario of the Global Macro Edge. I would encourage everyone, if you don't have a copy of the book, there you go, and rock and roll. Factors in developing MPM and impact ratio are the macro narrative, significance of event, whisper numbers, relative value trades, strength of asset classes. So there's a lot of things that go into this that are covered both in the course and in the context of the book. There's a rich chapter in this. Like I said, it took over 3 years to write this chapter alone, and just there's a lot of factors here that can be incorporated. I show you what I read, who I talk to, etc., etc. All right, so before I take questions, and I blazed through that, let me tell you about a new course I put together for you, Profiting from Market Positioning. And so this is the thing that I want to do in here, and that is, 1, identify which positions are vulnerable in your portfolio. You may be long something, and not know about it. If we look at the S&P, now this stuff's always easy in hindsight, but we look at the S&P, from the last 6 weeks and just all the systemic short vol strategies that were in the market. There are ways that, okay, listen, if we get a certain outlier move, this could, put me in a very, if I'm long equities, this could put me in a real, this could put me in some P&L duress, So I think in that regard, you want to end up working all this stuff and go from there. So net, I'm working a couple orders here. Give me a second here so I can turn this thing off. We got some action moving. Holla. Yeah. Give me a second. Let me turn that thing off so you guys don't hear when I'm working orders here. Boom.
Order acknowledged.
Yeah, there we go. There we go. Boom. And boom. Okay. Rock and roll. All right. So you take this, and this helps you let your winners run or take profits quickly, or just being aware you can build, risk structures that account for that. And then these strategies can also, create great risk reward trades, and you can overlay this on top of your current trading system. So if you have, let's say, a system that's doing particularly well, and another system that's maybe not doing so well, or you have a moving average system that says a trend following, and then you confirm that with what you see from market positioning, it just adds another level of depth or granularity. Some people talk about mean reversion systems, others want to do trend following. Well, you can do both, but if you factor in this market positioning, it can help you in that endeavor. So, like I say in this course, it's what I read, who I talk to, and how I use it. Trading news, I go over, event selection with specific trade strategies. Like today in particular, I'm trading the Bank of Canada by using a, I'm short some Canadian dollar here. So we're short 20 Canadian dollar, we're up 1,100 on that. The spread that we're in, we're probably down 750-ish, I'm guessing. Let's see here. Here's that market. I can't get that over there. But yeah, so We're up a little bit in the Canadian dollar. We're going to be down because I'm a long 20 and short 20 here. Okay, so that's making us some money. That's losing us some money. This is making us some money here. So net, this structure, I think, gives me a great shot to succeed today on this Canadian dollar, on this Bank of Canada event. All right, and so you just don't find places like that and or just information like this out there. It just doesn't exist. Not for a significant price anyway, if that. Or for some sell side desk. And then also I'm providing for this is a step-by-step for trading big events, how to calculate and utilize the market position premium and the impact ratio. And then ultimately there's a bonus Fed breakdown because Wednesday, March 22nd, there's a meeting. So on Tuesday, March 20th, I'm going to throw down and put together a pretty big breakdown on how to trade this Fed. This will be Chairman Powell's first Fed meeting. We're going to see how this all shakes, what he does, et cetera, et cetera. And as a result of that, you know, we will, I'll let you know at that point in time what I'm thinking and give you some great insight, hopefully some great insight into how I'm trading the Fed, what keywords I'm looking for, what part of the summary of economic projections I'm looking for, what we can learn from the Fed funds futures, et cetera, et cetera. So those are things that are all going to be covered in there. Frankly, just for that Fed meeting, you should buy this course. Like, don't even watch the course. Don't read the book. I mean, you should do all that too. But the Fed meeting alone can be worth the price of admission on this. So I'll also going to show you, remember, audited returns, 100K to 3.1 million, all right, and work that. So that's, I mean, again, I think that's pretty compelling. And then how I use the book profits particularly, the book profits themselves, like I say, go to pay for service dogs and train in place and rock and roll from there. I got here. Cool. So here's the sitch on this. Boom. Gotta do some admin stuff here real quick. My 5 connects. Yeah, I got people hitting me for the bank account. I got a pretty diverse network here, so I got IMs coming in because people are like, hey, Netto, position-wise, blah, blah, blah. I'm seeing this, so they hit me with good information. So I'm just saying, hey, you know, always appreciate the info. Always appreciate the good intel. Let me get this out of here. And rock and roll there. You know what I love about this, Jeanette, is that they're actually seeing, like, this is what it's really like in real time with trading and stuff flying around and whatever. This is not a canned presentation by any stretch of the imagination. And I'm just rolling with it in real time. Can't be more authentic than that. There we go. Okay, cool. Boom.
You all right over there?
Yeah, I'm cool. I'm just doing some last second adjustments here. The trading.
All right,
I mean,
that's cool.
part of the love of trading real time is that, like, this is actually real money, and I'll make and lose more money. You know what I mean? On one day of this than a year of selling books. You know what I'm saying?
I know.
So, like,
So you just do what you're doing over there. I'm gonna cover you for a minute, all right, brother?
This is priority, straight up. You know?
I know. All right, y'all, look, if you want to get John's course and get involved with what he does on a daily basis, then I'll put a link in there for y'all. It's tradethirsty.com/netto. J-Netto or Netto, they both go to the same place. And we helped him build all that. So it's pretty easy to get in and start looking at all the information. It's on demand. If you want to buy the book, there's another. You can get the book after you buy the course. Another screen will pop up and it'll ask you if you want the book. And him and his wife, they package those things up and ship them out straight from his house. And I've seen them stay up really late at night to get them out. It's pretty crazy. They're total, I'm talking passion and commitment to not only trading the markets, but also helping veterans in our country. And and John's a living testament. So he is trading real money. Okay, so John trades real money. If he has a sim account up at some point, then that maybe he's testing some theory somewhere down the line. Or
there's no sim account. There's no sim account.
Don't ever say to John that that's a demo account, because I'll just kick you out. I'll just kick you out of my room just for being an idiot. Period. So what he's doing right now is he's sharing his dome. That's his depth of market up there. He's took it down. He's making some adjustments on his side, but this will be a first time for us over here at MarketFest. This guy is gonna, put his money on the line right in front of you. And as you know, as a trader, that can be very distracting. It can be super distracting to have to try to entertain a crowd and and trade your own money when you're looking at several different factors that go into making your trade. So he's a super fast talker too. So y'all just have to just realize that is John Netto. And I recognized that so long ago when I first heard him online. I was like, oh my God, this guy is so wasted. He's talking so fast. And then over the years, I realized, no, that's just John. That's his passion. He talks. I didn't know there was anybody out there that talks as fast as me, but he's got me beat by like, a mile.
By an Alabama mile.
Alabama freaking mile. All right, so he's gonna share his screens and talk you through the trade. You can ask questions, and we'll get to them. Lewis, he has done a Saturday training for us in the past. The cool thing about John though is that he's not about this life. He's not about this, making courses and his life is about trading the markets. But he's one of those guys, I've known him long enough. I took him to the side and said, hey man, I'd really like to put you in front of some people and let them hear what you're doing over there right now. And he agreed to it. So there's some people out there that are just, they're all about just selling products and educating. And there's some people out there that put their money right where their mouth is. And he's just the real deal, y'all. I don't know any other way to say it. So he's going to share his screens.
So this is a real quick wrapping that up because then I'm going to
go ahead. You can do your thing, man. I'm just trying to let you get ready.
Bless your heart. Thank you, because I needed that a little bit. I had to situate some things here.
Okay.
Here's the deal. In this package, straight up, I have a number of different models out there. One of them is an options model because I know that and I'm about like learning through doing. So I have a unit of risk options which just trades options on equities. It's free for 2 weeks. And because I know a lot of people who want to get this course already have the book. So we sort of restructure this to where you can get something in lieu of the book. And so that's the free 2 weeks of unit of risk. That's a legit $500 value. I'll put a link up on that. But, the deal is that you get live trading signals. These signals can be auto-executed. This is a $4.95 a month situation. I think it's crushed it this year. I think that vol is systemically underpriced right now. And so if you have access to an options account, I have another signal service that I run called Protean. Regrettably, at this point, it only trades futures, and it cannot trade options on futures. It is what it is. It's still up money on the year, doing well. But this options course allows me to trade equity options using my unit of risk options model. And for 2 weeks, if you pay for this course, you get that for free. That's a $250 value alone right there. There's no auto charge. You're not going to be automatically subscribed to it. I don't play that game, people. Listen to me, please. I make my living on my trading P&L, okay? Like, seriously. This is what so the chance to come on here and to trade live is like I've done it on CQG webinars. If you Google me, like Google John Netto CQG webinar. I made $95,000 one day on a CQG webinar. I lost $25,000 another day on a CQG webinar trading the Fed. So like I do these things, and it's just kind of who I am, and it's just all good. So with that said, we got 15 minutes now. There's the link there. And Jeanette will post that link in the chat box as well. Yeah. And I'm gonna prep up here and walk you guys through a little bit about what's happening in terms of how I'm gonna trade this and the positions, etc.
Hey, so question on the board is how long does a trade that you get in? Like, what is your trade time average of being in a trade? Is it like super fast day trade or like?
It can be all of the above. It can be a 2-day, 3-day. It can be a 1 hour. It could be 10 minutes. It just depends on the metrics of the market. Like in the last year, being in macro trades for longer than a day just didn't make any sense because we were in a very tight compressed range, and so looking for more shorter tactical positions is the place. This is definitely a more tactical trade, but I think there's going to be 15 to 30 minutes of good action behind this Bank of Canada where we're going to get multiple swings back that one way or the other, and being in position to provide liquidity is the situation. You can see here, you can watch the total P&L here, but remember, this P&L is not going to update with the options positions, all right? So that's a factor to keep in mind. But you'll see, before we get out of here, these option positions will be I will probably have squared them away, meaning I will flatten everything out, and then worked on to crude or just see what's happening. Again, my game plan is that the statement's probably going to come out dovish. We're probably going to be able to cover here at a pretty decent spot, okay, and then I'll tactically work around the option spread. If we close between 77 and 78 in the next 2 days, this all more or less flattens itself out. However, if we get a big spike down, and I cover the short futures, I could then work out and then do the other stuff, and then work out of the call spread later on, and then go back higher again. And again, I don't mind if I can make 7,000, 8,000, 9,000 on the future side of this, and then lose 2 or 3 or 4,000 on the call side of this, that's just a great outcome. I mean, on a risk-adjusted basis, given my exposure, I mean, if this goes 20 ticks higher, I'm covered. I'm along the call spread, you know? So it's awfully tough for me to see a scenario where the Bank of Canada comes out hawkish, at least hawkish to the extent that it goes higher than 50 ticks, but it can happen, you know? So I'll be ready for that, and I may add to it or subtract to it just depending on what overall transpires. I mean, but I definitely think that any initial first bid down will get bid into, you know, and that's just what I think.
Hey, John, Tyler is asking, how many trades do you take per average or per month on average?
Unit of risk options probably takes 10 to 12 per month. That's a function of volatility, though. If there's a lot of volatility, then there's likely to be more price dislocations. I'll take advantage of that. If there's less volatility, it could be fewer. My normal trades could be 5 to 7 a week. You know, again, it's a function of volatility.
All right, so why don't you go over what you have on what windows you're showing them on your screen?
Yeah, so I have this Canadian dollar window up dom right here. You can see I'm short 20. That position's down about $50. I'm long this call spread. That position's about flat right now overall, and then I'm short 20. So I mean, in essence, that's the trade. I'm short 20 Canadian dollar, which is the S right here. I'm long 20. The Canadian dollar calls at 77. So for current context, it's trading at 77.47. And I'm short 20 of the Canadian dollar, 78 calls for 18 ticks. So in essence, you know, we close up 20 ticks. I'll lose 20 ticks on the short 20, but I'll end up making 20 on the call spread. And so this position benefits me on a big spike down, okay, or on a move lower that then reverts back to the other side. It hurts me on a big spike higher, okay, because then it puts me to a decision about what to do. But again, I don't see the Bank of Canada coming out with anything hawkish that puts us higher than 50 ticks. If they do and I'm wrong, then that's life, okay? But I have that first 50-point cushion to defend this 20 lot, which is why it's critical that you can trade both options and futures to put this structure on.
Right. And then that was what somebody was asking earlier, like, you know, what is the options trade that you have on, and what is the
well, like I've explained it 3 times now.
Right, I know, but I'm just saying you answered it.
It's okay. No, it's okay. Like, because there's a couple moving parts to it, but it will make more sense once it's complete. All right. But in essence, here's what I want. Let's keep it simple. I want the MF and market to sell down to this point where I have my buys. You can see my buys, these green arrows. I'm bidding 2 contracts a piece all down through here. Okay. Because I think that this announcement is going to trigger a down move initially. All right. And this down move is going to allow me to get out of this, and then ultimately it's going to turn around and spike back and rally back higher again, and that's why I can hold on to that call spread and play it that way. It's a different approach. It's not something you see every day, but it's how I'm trading this. What's the bad scenario? The bad scenario is the market rips higher, okay? I then take some off, all right, and then it comes back against me, and so then I lose on that side of it. This is definitely a possibility. This is a game that involves risk. You may see me lose 8 or 10,000 this morning. If that scenario happens, I may end up peeling some off, okay, to defend some of that position, all right, to get to delta neutral. This is a real big outlier, and then go from there. And now we're waiting for the announcement to come in. So I'm going to turn back on.
What do you look at to hear the announcement come in, or do you just watch? Do you price action?
No,
I see the market react.
I have a Bloomberg up. I'm watching the headlines, and then I'm also scoring this as well, so I can see the score come off, and that helps me too. So I have a couple different factors to say, okay, here's the score of the event, here's the time of the event. You know, I'm looking for key headlines, key words, and that'll all sort of help me do what I got to do. You know. All
right, so we have a couple comments. Rob says, John, you did a great job last week in New York. You were the best damn moderator as well. Way to shut it down! Exclamation point. So, there you go. Kudos, New York job you did there.
Great.
Okay. How much money do you have? Like a set percentage that you risk per trade, or how do you decide on like your risk or stop loss?
The confidence interval determines that. I'm not I only risk 2,000 or 5,000 or 10,000. Sometimes I'll have 20 or 30 grand of risk, 50 grand of risk. Other times I'll have $500 of risk. It's a confidence thing. It's a situation thing. You know, how I can structure the return per unit of risk on all that stuff. Like if I can build an option structure that I can risk 5,000 to make 20, you know what I mean? But then I'll delta hedge around it. It's a fluid variable. It's not just, I measure it more in terms of, all right, I use a probability analysis and map out, you know, these things. Say, okay, probability of this happening is this, probably that happening is that. So overall, what's my expected value from this trade? In the same way you'd build a market position premium on that, you know.
Right. Okay. Yeah. So just, this is just me, this may sound like a dumb question, but so are you actually trading with a stop, or your stop is your options position? So you're trading futures like a hedge. You're going, okay, this one went
right
my way. I'm getting out of this one and I'm going to focus on this one. So it's
exactly.
basically one real-time hedge.
Exactly.
Right
the
there.
Option call structure is my hedge for right now, because it's going to protect me the first 50 ticks higher. Okay.
Right.
And from that point in time, you know, then I can make a decision like, all right, I got to get out of this thing. And blah, blah, blah. You know, if it goes 100 ticks higher, if for some reason they come out with some crazy hawkish thing, then I'll defend it. The first thing I'll do is probably cut 10. I'll cut the future size in half. Okay.
Right.
Then assess from there. All right, what's the next step? So it's about, I tend to manage risk incrementally as opposed to binarily, meaning, all right, I'll piece out of it, okay, versus all or nothing. You know what I mean? There are sometimes when you got to be all or nothing because you're just flat out wrong, you know, and rock from there. We're 7 minutes to go till the announcement.
John, Rob wants to know, any thoughts on the oil report today?
Nothing.
You got nothing.
I mean, I'll have those thoughts. At
10
a.m. I'll have some more thoughts on that. My thoughts right now in the Bank of Canada and getting locked in here.
Yeah.
Real
P&L. Yeah. Okay. Tyler says, gamma scalping can get expensive from a transaction cost perspective. Necessary to lease a seat on the exchange to keep commissions under control?
I do, and I do.
He does, and he does.
But that's where your volatility models have to be robust. You can't gamma scalp, you know, and I talk about this in the book, chapter 5 in the book, in terms of measuring realized gamma. You can't gamma scalp if market's pricing vol at 18 and you're pricing vol at 18.5. That's not an edge, you know. So, I mean, you have to establish what differential between your modeling and the market's modeling that provides an opportunity to overcome those costs, whatever your transaction costs are. But obviously, you know, leasing a seat on the exchange involves another cost to it. So is your transactional activity enough that necessitates or justifies taking on that kind of position?
Right. All right. So for people who just joined us, go from left to right on your screen what they're looking at.
So this is the DOM. I'm trading the Canadian dollar here. This is the banker's acceptance notes. This is going to actually give us a sense of where the market reprices the Canada OIS curve based on this. And this is, you know, for December 2018, how many more hikes the Bank of Canada will put in. And here's the Canadian dollar futures right here. And I'm working some bids down below. I'm short 20. I'm also long a call spread. And with 5 minutes to go, I'm shutting it down. I'm not going to answer more questions. I'm going to get locked in.
All right. Got it. Okay.
Which is in 30 seconds. There's one question left. If none, then I'm going to no talking until after the
go ahead. Okay, so we're going to go silent and watch John play this trade out, and then he'll go back and recap. A lot to soak up, guys. This guy's the real deal. Been doing it for a long time. Here we go.
3 minutes.
All right, sir, for those who are just joining us, John Netto is live. He's what you're seeing right now is his screen. 3 minutes to the news announcement. He's going to trade the Canadian dollar. Then we're going to talk about crude oil and potentially put a position on there. So right now we are just listening to him. He's scanning the market right now, waiting for the news to break. He's got a squawk box going in the background. We're just going to patiently wait here, just like you should anytime you're about to get into a trade. We're going to patiently wait and watch him execute depending on what the market does. So everybody just hang tight, keep your questions coming, and we'll get them covered as soon as he gets through one of these major points in his month, which is waiting for these news announcements, trading them, and some of them can make or break your year, but for him, it's all about balance. And I think he's done an excellent job this morning sharing that with us. We'll be right back.
On hold at 1.25% expected.
On hold, not much.
Bank out with their commentary following the rate decision, saying these new projections
kind of in line. Not much happening here.
5% in 2018, up from their 2.8 to 4% previously. They're also raising 2019, also 2.8 to 4.8 from 2.2 to 4.3 previously. They're taking up their 2020 outlook as well.
They talk about an after waiting. That was more or less in line.
Fourth quarter growth was slower than expected. Each growth is firmed, but still some slack in the labor market.
Took off 5 there.
The economic outlook does warrant higher rates over time.
I'm not sure we're going to hit my bottom point, so I'm leveling off some of my short gamma exposure on a bounce here. Still would very much like a move lower and let them hit me on the rest of it.
All right, so if everybody notices, John, in John's, the chart that's on the bottom is showing that he's 15 short on the Canadian dollar. He was 20 short going into that news, and you can see down there that he's looking to buy some back at those green levels that you see in the bottom right-hand corner of that chart. That's what he's doing here. He was anticipating a lower move. He covered 5 already. He's still got 15 short. If it doesn't go lower, he'll figure it out. That's how you trade. That's what you do when news comes out. You're used to trading for years and years and years, and I mean, studying the work that he's put in. It's you know, always in anticipation of a move. If you don't get it, then you just play it out depending on what the market tells you. That's what he's looking at when he says he's just covered 5. If you look at that bottom left chart, he had 15 short. He's covered 5. This is real money. I'm going to let him finish the play, and then we'll go back to a little bit of teaching.
This was a dud. Vol got smashed on this pretty good. We did get a modest move lower. They did come out. The only thing noteworthy of this event was a modest dovish event. Basically, the geopolitical risk in Africa is increasing, so that's not a shock, and that's just not a shock. So now I'm long 20 by 20 on the call spread. Okay, I'm short 15 of the underlying against it. So I'm kind of neutral right now in this market. I think that we may take a dip lower, but literally, as far as situations go, I'm about as market neutral as we can get. We scalp that out, 5 ticks, about 15 ticks lower there. We benefit from a little bit of vol decay on that. It's kind of humming around. I'm not sure what more we get from this, honestly, in that regard. So, you know, it is what it is. The Canadian dollar has held firm here. I'm going to keep this my orders here. You can see the orders that I put out there filled. Bought 5 at 77.35.90. We're about 8 ticks off of that. Got some nice vol crush on that, just to give you guys a sense of just, you know, where that's at. We could have got a little bit more fortunate with a little bit of a further spike down. As you see, what I was trying to do here was work these bids in place. We just didn't quite get that degree of move. It was a real dud in that regard, you know, and it was just a real dud. I'm offering out some of these options here. Going to lower off that exposure. Okay, so I'm going to cover some more shorts. I'm in that 10 by 10. Realize that loss there. Pull about 5 more. Offering 10 more. Okay, cover 10 of those. Sold that vol. Okay, I'm out of that call position. Lost 24 in the call position. Now I'm about to make some money here. Cover that position there. Okay, cover that last of that short. Covering this here. Okay, so I ended up 820 bucks total. I was up $400 going into the number, ended up making 820, or another $400 on top of that. And that, again, that was kind of a dud outcome. In this regard, let's just go over the summary real quick, and you can see I made $1,200 being short the Canadian dollar. I lost $2,400 on the long call side that I had, and I picked up $1,500 on the short call side that I had. So $2,700 minus $2,400. Honestly, after commissions, it's kind of a wash in that regard. I'm going to cancel out these things. But here's the thing: look at the position we put ourselves in, and this is why the market position is so important. Okay, had the market sold down to this level, had we got a little bit more fortunate on what was a modestly dovish outcome, we get filled long. And now we're playing this move back higher again. Instead of being up $300 or $200, I'm up 5 to 10,000. Okay, and that's what I'm trying to get at. Is I set up a great risk reward trade, scratched out a couple $100, whatever. That's not the important part. That's not the kind of variance I normally see in my trades. But I can tell that this trade is done. Okay, but through that superior structure, instead of buying calls or puts, which would have been smashed, I was correct in terms of my analysis that the statement would come out modestly dovish. I was correct that they would sell it down. We just didn't get any kind of real move lower, though. Had we gotten a move lower down to this spot, which can easily happen, we pick up 7, 8, 10,000 bucks. Jeanette, take over. But this just, I mean, this truly went nowhere. Like, this truly went nowhere.
Yeah, I was listening. I was like, wow, okay. They didn't throw you the ball. They just stood over there.
Pitch it, guys. Come on. You know, we got the audience here. I mean, this is it. I mean, there's your range. We traded in a 25-tick range on a Bank of Canada announcement. It just didn't. It was just nothing. It was a non-event. And vol was priced for an event. I mean, vol got smashed pretty good on that. So we, like I'm saying here, we picked up on the ball that side. We lost there, and then we made on the short position we were in. It is what it is, you know. Like I'm saying, I was up 400 change before that, 490, up 820 now. Covers commissions and knowing that we had some really nice upside there, had that thing flushed and come back the other way, we'd have been up a nice little something. It is what it is. Okay.
All right. So you're flat on the on the futures, and you're flat, and that was you closing out all of your options positions. You are now flat.
Everything. Read across the board here, up 1,200, minus 490, down 2,400, up 1,500. And that's, again, is structuring superior risk-adjusted trades in real time. Can't make this stuff up. This is real money. It is what it is, you know. It is what it is.
Do you use the Japanese yen for market direction at all?
I use it all.
What?
I use it all.
You use it all. All right, that was the question that we had on the board. Is there a trend or pattern in which events are most profitable? Is your P&L pretty evenly distributed along the entire economic calendar?
It's pretty evenly distributed along the entire trading calendar. In terms of the markets act in a certain way, it's not just from economic events. I trade everything. You know, I trade, an event could be a market making a new high. An event can be a political announcement. An event can be nuance change. An event can be vol is too rich. You know, so this is just one aspect of what I do, and the macro narrative is what makes all of this possible.
All right, so what brokerage are you using?
Jeanette, do you realize what value this is, what we're doing for free today? This is so crazy.
Look,
like,
I do, because
like
I used to have to do it.
proprietary trading desks. They're not even this sophisticated, seriously. Like, many of them are not this sophisticated.
It's like, what the hell? It's so hard to make your decisions and then know people are watching, and then, you know, it's almost like you feel.
That part's not hard, actually.
To me, it is. It's like if I lose money, then I teach about losing money. If I make money, we don't really put the focus on the making the money. And if like there's a non-event, then it's like, ugh, stupid market didn't pay me on my event. You know, it didn't pay me. Especially if you're looking at big news announcements to help you, you know, make it when you're like you and you're really good at trading those news announcements. And you have a strategy for it. It's you know, but I mean, you're in it for the long haul. You're not in it for shits and giggles. So it's you know.
so back to the, we have a few minutes, and I'm gonna take a peek at crude, which is actually buckled pretty nicely. And the S&P is giving back some as well. So we've seen some risk-off sentiment around, which is another surprise that, like, with the risk-off sentiment, the Canadian dollar wants to actually come under a little more pressure. But it is what it is. We're seeing the yen pick up a little bit, coming off of its lows, etc. So here's the deal. Here's this market positioning course. This is real stuff. This actually gets used. On-demand course, there's a lot of sessions available from the past that I've done this course before, and each one of them is unique. There's a Q&A session we have coming up for the Fed. You get my first book, and then 2 weeks again of this live signal service, because I'm a guy who's about actionable signals, and go from there. You know, let me. How do I get this? Okay, back. So let's go back to this audit letter real quick. Okay. When I say back, I mean back. Let's go back, Jeanette. So this is from Mike Coglianese. You can go to cogcpa.com. All right, he just spoke in New York at the Gold Macro Series. And let's just read this audit letter, okay? We have examined management's assertion, including an accompanying John F. Netto proprietary trading capsule, this is following Rule 4.35, which is put out by the CFTC in terms of Regulation 4.35 in terms of how you can disclose performance. Now, I'm not a CTA. so I don't have to follow this, but I did because it's the generally accepted it's a generally accepted standard of how you report performance in the CTA industry. And being that this was all futures trading that took place, that's the benchmark I decided to use and hire someone as reputable as Mike Coglianese to perform this third-party verification. So it talks about how the examination was conducted, which is the second paragraph, using the respective attestation standards established by the American Institute of Certified Public Accountants. And then the most important part of this whole letter is that this final paragraph, and I'm going to read it to you just because it's what I do. In our opinion, management's assertion that John F. Netto complied with the aforementioned requirements during the period of January 10th, 2010 through December 31st, 2015 is fairly stated in all material respects. That's accountant talk for saying this shit is legit, okay? But that's just how they talk, all right? So this is legit by this paragraph right here, okay? Is fairly stated in all material respects. This is fairly stated. 3.1 million is fairly stated. You're welcome.
You're welcome. I love it. You're welcome. You've been doing this for so long. It's awesome.
So that's what we got. And now we're going to take a look at what's happening at risk off here in these markets. I'm going to pump this up. And give me 1 second. You go ahead and talk, if you would be so kind, Jeanette, talk for a minute. I'm going to square some stuff away. Put myself on mute for a second here, okay?
Yeah, that's fine.
All right, give me a second here. Oh, what we got? Where's the mute button?
All right, everybody. I'm going to, while John's fixing stuff over on his side, Bob's asking about John trading other people's money. I don't think he does that. I know that he has that signal service, though, which, he ran that signal service for a long time, and then he stopped doing it, and he put his focus on finishing the book. And because he gives all the proceeds to that book go to wounded warriors. So you saw pictures of him giving the money to, to the veterans, and he's all about the service dog program. And, he lived that life. It's not like it's because he had a family member or a best friend. It is his life. He did it. He is a Marine, I think, if that's what I'm trying to say, Marine, because I hear him say Semper Fi. He gave his time to our country and served us, and now he's back to his trading life. And so if, the question is it real money? Yes, it's real money. Is he the real deal? Well, he just showed you the audited letter that shows from running the service for those 5 years that true and real to form, the audit tells the truth. Somebody made the comment about him talking super fast. And look, I just have to say, he's not a salesman. He's not on here trying to sell stuff. He raises money and gives it away. He obviously doesn't need it. I mean, he's trading, putting some pretty heavy positions on him. That's his real money. He comes here out of a pure grace to help me come share his vision of the market. And trading live is so freaking hard. He can say it's not, but that's because he's used to it and he's done it for so long. But I don't have many guys. I'm just going to say this. I don't have many guys that will come on here, share their full screen, share their live account, tell you their real position, track the trade from start to finish, tell you if they made or lost money and exactly how much. That's his true P&L. That's his true account. And I just want to thank him for putting it on the line for us like that today. It's pretty powerful stuff. He mentioned he's going to look at the crude market here, and it looks like he's changing his charts up. Yes, Walter. Yes. Right. Okay. So, I also would like to say that, for those of you who feel like you need more proof, or you need more, you need something else to make you feel warm and fuzzy when you've got somebody trading live like this, just Google them, right? We have that power of the wire. Go Google the people that you come across in this industry, and you will find that there are going to be, naysayers, but for the most part, you'll find the guys that we bring on here have pretty solid reputations. And I mean, I've known John since, early 2000s, been around for a long time, and heard him on a Squawk Box the first time I ever heard him, and he was cussing up a storm, and I was like, oh my gosh, but we're live. And he was like, this is who I am, Jeanette. It's fine. It's going to be fine. We're grown. We're all grown here. It's just so passionate. He just rolls with it. It's awesome. Yes, once a Marine, always a Marine. The schedule for later, I'm going to share. I'm not going to take his screen away, but I can just tell you. Todd Rampy is up at 10:45 Eastern, and then A.J. Brown, Stephen Brooks, and Jeff Bish is going to round us out today from Market Gauge. He'll be our final speaker. So it's a long day for us here at MarketFest. It's a long day for me and a long day for the speakers to come and give their free time. So, you know, of course, obviously, they're all going to tell you about their programs, tell you about their courses, their software, their, you know, like the signal service. The question earlier, does John trade for the people? Nobody has that signal service, and he's given away 2 weeks of it in this course. I've not seen him do that before. I've not seen him give away 2 weeks like that, and he's doing it just for us exclusively here at MarketFest today. So I meant to say thank you to him for doing that. All right, let's see. Looks like we have a lot of new people in here. Are you there?
Yeah, I'm here.
hear you.
I'm here. Thank you so much for graciously filling in there.
Oh, yeah. All right, so new charts up. I see you got your crude up.
Yeah, I got my crude up. We're doing that. I
gas.
want to actually spend a little bit of just a minute or two on the unit risk options. 2 weeks, which is included in here. This is something
let's
that,
talk about that.
you know, when I saw a volatility regime change, this is a signal service, $50,000 of fund. It just simply trades equity options, okay? Here are the numbers on it. You can go to this. I'll put this in the chat here. Dashboard questions. Okay, there that is. How do okay, I put that in there. Bang. Does that send to all? It's not pasting in. Paste. Why is it not pasting in? Am I permission to type?
You should be able to. Tell me what you're trying to do. Tell me what you're trying to do, and I'll do it for you.
You can grab this link right here and put that in the chat, because that's the 2 weeks that they get for free, is the signal service here for signing up.
That big old link that you have at the top of your screen right now?
Yeah, exactly.
That's long. All right, let's see. I can't copy it. Just let me get it for a second, okay? Just don't take it down.
I'm not doing anything, sweetie. You do your
all
thing.
right. Let's see. Protein. Talk about the service dogs and giving the money away. And I said you were a Marine. I'm right. Right.
Yeah,
I don't know why. I
You're
had a brain
definitely-
part on that. I was like, oh my God, I know he's a Marine.
No, I was definitely 8.5 years. I got out in 1993 and got out in 2002. I served in Japan for 4 years. I was on an enlisted to officer program, went to the University of Washington, went to Thailand, Bangladesh, Korea, China, learned to speak Japanese and Chinese. When I was stationed at the U.S. Embassy in Tokyo, I was on a special diplomatic security program called the Marine Security Guard Program for close to 2 years at the U.S. Embassy in Tokyo. This is the mid to late 90s when I was in Japan and lived in Tokyo for 2 years, and then lived in Iwakuni base as well for 2 years. So for all my former Marines out there, or current Marines, Semper Fi, and God bless, and all veterans in general, thank you for your service. This country is a better place because of you all. So this is what I got in terms of the performance capsule here. You can see here the live trades, and this just shows you, what these trades are. You can go back and check the track record. This is incredible transparency. Here are the losses, here are the wins. Here are a couple really nice wins in here with some high vol we had earlier on in the month. So I think I have a way that has proven to be up till now pretty robust in terms of identifying mispriced volatility situations in the market. And this is an actionable way to take advantage of it. It's yours for free for 2 weeks. You get an email that comes in that says, hey, within seconds, it can be auto-traded as well for an additional $49. That's what collected 2 charges for that. Or you can just get the emails and execute them yourself, and it's priced at $4.95 and not a penny less. And it's yours free for 2 weeks for signing up for this market positioning course.
All right, let me get.
All right, I'm gonna get down to this crude number now.
TradeThirsty.com. Hey, what brokerage firm do you use? Somebody's asked a couple of times, and I keep not asking.
I traded Advantage Futures and Stage 5 trading. Stage 5 with Anthony Giacomin. Reach out to them.
Yeah.
And good old Anthony Giacomin is my boy. He's talked about in the book a lot. I love what they're doing. They have a Stage 5 trade analyzer with the Netto number on there. So whether you have an account with them or not, open an account there. Check out the Stage 5 trade analyzer and, Tell Anthony say, John Netto say, what's up?
I'm going to do it right now. It's always interesting to me how many people we know, but I don't know that you know them, and you don't know that I know them, and then I'm like, oh, God, they know each other.
Yeah, no, Giacomo's my man, dude. That's good people right there. Good, honest people, hardworking people, the kind of people you want to work and associate with.
How do those alerts come out to people?
They come via email. Okay. And they're auto executed if you pay for the $49 more every month for auto execution. It's pretty straightforward. My job is to generate the signal. I generate the signal, and the person decides if they want to auto execute or not, or they can serve it as an overlay in their portfolio, all sorts of things. So there's that. I'm gonna take a shot here. I just bought 2 crude. This is on the chart a really nice low spot. If this recent low holds here, I'm gonna nibble on this a little bit and see what we can come up with. I thought the crude net has a chance to actually head a little bit higher. I'm surprised a little by its weakness early on. It has pulled back. I can start with a position here again. If this develops, can throw 5,000 or 6,000 of risk out there. You know what I mean? If I can begin to build a position, if I can get this to hold on. We had an API number yesterday that came in with a really big build in crude versus what the market was expecting, and we can go from there. I just sent the signal off as well in my Protein signal service, which is trades futures. That's not the unit of risk. Just bought a 1 lot of crude in there as well for the signal service. So I'm starting to build a position here. I'm aware that the DOE number's coming out. That's a risk, obviously. But I do think the crude has the potential to go back to 62.30 in the short term as I look at this chart and I look at the overall market structure. The S&P is pulled back. The S&P is right up near highs right now. Small caps are at highs. The emerging markets, you're looking at the MME, are doing okay as well. I think if we get a number, a decent number out of crude, again, applying some market position metrics, we could get a rally back higher again. So I'm making it a little more aggressive here, actually. So let's just see how this works early on. I want to see next minute or two, can this feels like it's building out a base. If it pulls back again, just add back into it as well and rock and roll. This feels heavy, man. This feels heavy, but I like that. I like that.
What makes you say that?
You do this long enough, you know what I mean? And this is about the spot that there should be a little bit of sellers. We sold in 61.75-ish. It's now back at a spot where there's some short-term selling into it, so there's a bit of a layer there. But if it doesn't sell down from this level, I think that's actually a good sign. I can actually see the market, and I'm sort of just processing this all in real time in my head as I'm doing this and looking at the charts. I'm just kind of looking at what everything else is doing. We got the S&P now not very far off of highs. Crude has had a pretty decent correlation to the S&P over the last week or so. Crude's a little bit weaker, so it tells me that some of this may be concerns over this DOE number. So if this DOE number doesn't actually come in as weak on the crude side, because there was a big build yesterday as people thought, there's a chance. Now, I can't forecast these numbers, but I can say that if this number even comes in at only plus 2 million, I think crude rallies. And if the API did overstate that number, there's a chance to maybe get a rally here. I'm buying 2 more. I'm long 4 crude now. Let's just see how this begins to develop. Again, I did not think I'd have the chance to buy this at 61.90, to be honest with you. Especially if you told me early on the S&P would be at 27.17, having shaken off 50 points off the lows, or 40 points off the lows, and crude would actually be down 72. This really feels like this is an API draw concern, or API build concern from yesterday, and there may be some real value here. And if this sticks here for the next couple of minutes, I'm probably going to add to this position, take on some more risk. Because if the build if it even comes in line, I think we can probably get back to 62.30 without too much grief. And crude can pay a little bit of catch up to the rest of the market here. We'll see. I mean, this is a risky business. This is how this plays out.
When is the crude news?
It's in 5 minutes at 10:30 Eastern time, or 4.5 minutes. I have a couple one-lot offers above. Again, that's the rough price target of where this could go back to. Again, this is a classic market positioning play. I think that there's 20 cents or so of premium, especially given, and that's been exacerbated looking at the rally in the S&P versus the rally and everything else. This has to be concern over that API number yesterday. And API can be a little deceptive, frankly, in terms of what it does. So I think if the number comes out billed, I'm not going to get hurt that much, but if it just comes in even in line, we can do okay with this trade. And again, I talked about this little bit of a bounce here. Let's put it on a smaller chart, on a 15-minute chart. You'll see here that bounce point was natural from there as we now begin to roll back down a little bit lower.
Taking a look at markets here, about 1 hour into the trading session, we've seen equities continue to pare back losses. The Dow down about 150 points now. Right near session highs in the S&P minis at 27.16. Nasdaq 100 futures down less than 0.25%. The Nasdaq Composite down less than 10. Stocks have improved. We've seen the dollar also improve. The euro on session rose to 123.94, 105.95. The dollar yen also approaching session highs.
Buying 2 more. So I'm long 6 crude now. This is a nice higher low spot if they buy it. That's 61.80. If this sticks, I'm going to press it and add to it.
All right, say that again. Give you a reason why. I'm buckled up. Buckled up. Is it too early to do a shot? Not in Vegas, right?
It's 3 p.m. somewhere.
All right, this gentleman says he can't see himself being in a trade for more than a day, but you're not really, I mean, you're not really a position trader like that, are you? You swing some?
The market's right, absolutely. You know, there's structures for all that. But, I mean, when you have volatility the way we do, then you go from there, you know. So I've added 2 more. This low is in place, I think. Put a couple stops down here.
Minutes, weekly, daily data. Crude expected plus 2.5 million barrels. Gas expected minus 0.5 million. Distillate expected minus 1 million. Utilization expected to remain at 87.8%. Yesterday, API data, we saw big build in crude at 5.7 million barrels.
Spot some RBOB as well.
The data crude oil futures on our flows still at 1.2%, 61.85.
I think if this number comes in line, we make 30. If it goes against line, we lose 15. So nice risk reward. Bought 10 more. I'm long 20 total. One time.
Daily data, just 2 seconds.
Whoa.
4 million barrels.
We got that.
Got
Nice trade. Nice fucking trade. Fuck yeah.
Easy, easy. Wait, what time is it? I got to make sure they blur that out. 9:30. Congratulations. Getting it right.
That was our pop, though. We talked about. We got that move. My protein signal people, they're doing okay here. And I talked about back to that price point of there you go. Taking it down. So picked up 6,700 here or so. Got that nice move higher off of that number. Now we should get a little bit of a pullback down again. Look to buy that dip again and play it from there, you know. Picked up 6,500 on that, Jeanette.
I see it. I see it. It's pretty sweet, dude.
My signal people in protein grabbed about 1,100 on that. That was a nice trade for them as well.
So you made roughly 400 on the last trade, and call that like a commission wash. And this one you said you just made 6,500.
Yeah.
All right.
And also on RBOB as well. We picked up 403 on RBOB here. So picked up close to 7,000 on that because RBOB got us 403. I was one of 2 out of RBOB. And the crude came in, again, we talked about this, crude came in at 2,400, and I just felt this from experience, like the market's really concerned about this API, and I think that they're reacting irrationally. I looked at the differential between what happened between the S&P and what happened between crude. I'm like, this just doesn't make sense. And that's where my relative value market positioning model came into play and said, all right, let's do the math here real quick. And the math set up accordingly, and that is how you make a living. Now I'm going to keep it real. You just saw me pull down $8,000 in real time. There's no excuse not to buy the course. Just straight up, Jeanette. I'm going to keep it real, dude. There's no excuse now.
I mean, even just the course aside, the alert service, like I knew you and my guy Silas had talked on the side about how you could give some value because we were pulling the book out of the deal because so many people had already purchased the book at this point. I didn't realize you were giving away the service for 2 weeks. I was like, he's what? We need to raise the price.
Well, the option service for 2 weeks is there, so there you go. But I mean, listen, here's a couple things. One, win with humility, lose with dignity, and appreciate the opportunity, okay? And that situation. So I say this in a genuine way. Like, if you want to make money trading, okay, whether it's buying the book, subscribing to Signal Service, what I'm doing will provide value to your process. Now, after seeing me trade in real time, seeing me scratch, seeing me win, seeing me lose, seeing me whatever, seeing the audit track record, if that's not enough information to make a purchase decision, then you probably are going to be the same type of personality that will hesitate to make a winning trade.
Exactly. You shouldn't be trading.
No. So I say this genuinely, like, then stop trading. Like, if this wasn't enough to convince you, please, and I mean this from a place of love, just quit trading, spend time with your kids, spend time with your family. Life is so short. Just spend time with your family. But don't trade. If all of this wasn't enough to convince you in real time, with real money, with real audited P&L, just stop. Seriously. Don't just quit. Because then you're not the personality that can pull the trigger to take a winning trade either. Do you guys understand what I'm saying? Like, does that make sense what I'm saying? Like, if all this didn't convince you, then you're the type that doesn't have the personality to be a winning trader. Seriously.